In the following lesson we are going to discuss the rules for trend trades. The first rule will be to check for the presence of strong trigger lines on your large chart. It is also important that you know where your profit target will be placed before you place your entry. The second rule is to double-check termination conditions. This is one of the most important rules when taking a trend trade. We will spend a lot of time going through termination conditions in the upcoming slides. Again, much like rule number 1, you need to make sure that you have room to your profit target and know where any management spots may be before you place your entry. Finally, the third rule is check for the presence of divergence on your small chart. This is especially important and will determine the entry criteria for your trades. If divergences is false, you will buy or sell support or resistance in the trigger lines. If divergence is true, you will wait for a market flow signal before entering the position. We will look at examples of this later in the presentation. As stated, termination conditions will be vital to taking high-probability trend trades. Let us define the termination conditions, and then we will look at examples in the upcoming slides. A termination condition or area is any Fibonacci-based indicator that has the potential to stop the market. It is important that you check the trigger line strength and location of the triggers versus the Fibonacci area to determine whether the area will hold or break when price reaches the area. To review, the major Fibonacci areas that will stop the trend are red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots, magenta retracement divergence lines, cyan divergence lines. Finally, multiple divergences in the same price range or location have the potential to stop the trend. In the following slide we are going to look at a termination condition. During class and on many videos, you will hear this pattern referred to as a pivot stopout or a divergence pivot stopout. Focus your attention to the top left of this chart. Notice we had the divergence represented by the negative 98% number. The divergence creates a magenta line. During the subsequent price retest of the high, which is also the last Fibonacci resistance, also known as the edge of resistance, we anticipate a top. After price trades above, and then back below a magenta line, from Fibonacci we stop doing long trades. Once price is below the magenta line and Fibonacci resistance, this look usually will make the market reverse trend. It is particularly important not to continue doing long trades after this pattern. In the next slide, we will see a pivot stopout pattern at the Fibonacci and divergence lows. Notice we had the divergence low represented by the negative 158% number. The divergence creates a cyan line that runs to the right. After price trades below, and then back above a cyan line, from Fibonacci we stop doing short trades. Once price is above the cyan line and Fibonacci support, this look usually will make the market reverse trend. It is especially important not to continue doing short trades after this pattern. In the following slide we will look at a termination of trend as price reaches a low at Fibonacci support. When price reaches any Fibonacci support, it is important to analyze the location of the trigger lines relative to the support. If the trigger lines have not moved below the Fibonacci support, a low is anticipated. It is especially important not to continue doing short trades after this pattern. Multiple divergences may also cause a termination condition to be true. If you notice, this chart has 3 divergences that are labeled at 1, 2, 3. The market has a tendency after the third divergence to make a strong move in the opposite direction. If you reach Fibonacci resistance with any divergence present, it is particularly important to stop taking trades with the trend. Finally, after the third divergence, we may look to initiate trades in the opposite direction on the smaller charts as trend trades after the trigger lines reverse to the downside. One more note, after a strong termination condition, like the one shown here, if the trigger lines are strong, they will usually cause the market to break the next Fibonacci support. Knowing that a termination condition was true will allow you to hold your positions for larger profits. In the following slide you will notice the chart time frame is a 5-1 chart. The same pattern works on every time frame. Focus your attention to the bottom left, you will see the 3 divergence pivots labeled clearly. After the third divergence, a market reversal is anticipated. This will make a change in trend to the upside. As the market reached the top, you will again notice the same pattern in the opposite direction. Notice when the third divergence is true, the market will reverse. We use this condition to exit trend trades as a management tool. If we are at a major termination spot on the larger charts, this pattern is useful to trade in the opposite direction. Finally, you will notice at the low marked by a blue Fibonacci support, there are also yellow 1-to-1 dots present. When the market trades to and above the yellow dots, no more short trades may be initiated. Remember, it is important that you are always monitoring your trigger line location relative to the termination conditions at yellow 1-to-1 dots, or any Fibonacci areas. Now let us look at how this termination condition rule will be used in a real-world situation. Notice the larger 13 chart on the left. Notice we have a pivot stop out of a magenta line near Fibonacci resistance. This will tell us to stop doing long trend trades. Now on the chart on the right you will see a great look for a trend trade long. This trade has a lower probability of winning due to the termination condition on the larger Fibonacci base chart. As a new user of the software, it is important no termination conditions are present before doing a trim trade on the smaller chart. Now that you understand termination conditions, we will turn our attention to the trigger lines to help us fine-tune trade setups on the smaller charts. After the market makes a termination condition at a low, followed by the small trigger lines going up on the larger chart, it is now okay to enter long positions. While both triggers small and large are trending up strongly, you will be able to take additional long trend trade positions. If the market has a termination at the top, you will be able to do trend trades on your small chart after the small triggers roll on your large chart. You will notice after both triggers roll, and the small triggers are down, and below the large triggers with the large triggers strong and widening, you will be able to take more trend trades in the direction of the trigger lines. The following slide depicts many opportunities to do trend trades. Always checking the location and strength of the trigger lines before you place an entry is important. If you notice that check number 1 and check number 2, the trigger lines are strong to the downside. As such, you will enter trend trades on the small chart when the rules are true. Notice at check number 3, the market has reached Fibonacci support and yellow 1-to-1 dots. This condition will force us to wait until the trigger lines and price have exceeded the lower end of the Fibonacci support. This will be the time we'll recheck the triggers and continue with entry number 3 and possibly entry number 4. Finally, at check 5 at the low may have been one more trend trade possible. This is only possible when the trigger lines are below the blue Fibonacci support. The final way to use Fibonacci and trigger lines to establish trend trades is when Fibonacci changes state from support to resistance or resistance to support. At check number 6 you will notice Fibonacci resistance, which was red turned into Fibonacci support, which is now blue. At check 6 the strong triggers will allow you to take another trim trade entry as the market pulls back on the smaller chart. Finally, at check number 7 the red resistance holds, which is a termination condition. This would be the exit for long trade taken from entry number 6. The termination condition at check number 7 will also eliminate any further buying opportunities. Now we will quickly review the rules one more time. 1. Strong trigger lines must be present on the large chart. 2. It is particularly important that no termination condition is present before entering a trend trade. Finally, the entry will take place after the market reaches support or resistance and the trigger lines. Entry will be taken immediately at support or resistance when no divergence is present on the small chart. A signal for entry must be used when divergence is present prior to entry. In the upcoming slides we will show you the very slight difference between the two entries. On the following chart starting on the left you will notice our 13 chart check for strong trigger lines is true. We do not have a termination condition on the high. And on the 5 chart we have Fibonacci support mid-bands and large triggers falling into the same area. This will always be your look for a trend trade area. If divergence is true on the high pivot on the 5 chart, you will wait for a signal on your 8-range market flow chart. Notice on the 8-range volume chart on the right. The up bar from Fibonacci support will be the signal to buy the market after that bar has closed. The next slide shows you the exact same trade setup. This time there is no divergence present on the high on the 5-1 chart. The only difference between the entry rules. If you do not have divergence on the 5 chart, there is no need to wait for a market flow signal for entry. You will buy the market at support mid-bands and trigger lines as it is going down into the area. You want to get in as close as possible to support, anticipating the market to continue the trend. The better you become at trading from the correct area, the lower the overall risk on every position will be. Another benefit is that overall profit potential will be much greater on every trade. Remember, a bad fill price does not change the outcome of a trade, it only affects your risk-reward results. The following slide depicts a short trade setup. The first thing to notice is that the large 13 chart makes a termination condition at Fibonacci resistance at the top. This is followed by a breakout of support, followed by a strong trigger line condition conducive to short trade on the small chart. When deciding how to enter on the 5 chart, recognizing that the 5 chart has no divergence on the low, combined with a clear resistance and trigger line entry for a short position. Remember, to minimize risk and maximize profit potential, the entry is to be placed inside of the trigger lines at the mid-band. Remember, since there is no divergence present on the 5 chart low, you will enter the position at the spot. In this situation, the market flow chart is not needed for this trade setup. It is worth noting that once you are in your position short from the mid-band and triggers, it is a nice confirmation to see a short signal from the market flow. Remember, this will happen after you are already in the market. For more examples of trend trades and termination conditions, please review the trading plan on our website. You may also visit Nexgen's YouTube page. There is a link at the bottom of the Nexgen website. On the YouTube page, you will find playlists of past educational video content, as well as additional training videos. Spending time browsing our extensive educational video library will help you solidify your day trading education with Nexgen. Remember, trend trading will be the first step to success. While Nexgen has been teaching these and other trade setups for over 23 years, please, first focus on trend trades. We feel these rules will give you a statistical advantage over the market. Also help you gain confidence in your trading abilities. High probability, strong trigger line trades will generate an exceptionally smooth equity curve. Entering and exiting the market at the correct areas will help you keep your risk-reward ratios in check. It is vitally important that you do not take trades without trigger line agreement, Fibonacci symmetry, or when a termination condition exists. While on demo and learning the rules, please take pictures of the trades you execute on the trading simulator. Post these trades in the chat room for feedback from our educators. Thank you for trusting in Nexgen's Fibonacci analysis, and we look forward to helping you achieve your financial objectives.